Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin not zero, and we have a great episode for you today. Sam Callahan, Bitcoin analyst, author of the News Block, our friend, he's back. He's a return guest, and we're going to talk with Sam at length about Bitcoin markets, where we are in the cycle, probabilities and possibilities of Bitcoin strategic reserve or other nations doing something similar. We'll talk about macro with him a bit as well. Of course, we'll check with our good friend Bimet, a BB from Galaxy Trading, as always, to talk about markets. And before we get to all that, I need to remind you to please refer to the link to the disclaimer in the podcast notes. And note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. We have a great one for you, so let's hop right into it. Let's go now to our friend Bimet, a BB from Galaxy Trading. As always, Bimet, welcome back to Galaxy Brains.
Thanks for having me.
Well, we're still sort of in the chop time after the major uplift, November 2024. I think the third best November, only the third best in Bitcoin history. It was up 40%. Now it looks like Bitcoin's taking a little bit of a breather. You've seen some alts, it's a little bit of rotation internal to crypto. But what's your sense on where we are right now?
I think folks are reaching along the risk curve at the moment, and that is largely why alts have outperformed recently. And so, Ripple was a big outperformer over the last couple of weeks, going from 50 cents all the way up to almost $3. So that was an insane move. We've had other alts that are large caps trade incredibly well. DeFi is trading super well. Aave, I think got up to 250, Compound, etc. And so I think folks have done really well this year in crypto and are now more comfortable with the downside risks in crypto. And so they're just reaching out the risk curve. And I think that's best demonstrated in ETH BTC, which is now testing 0.04, which is a big level. And I think that's something that's a trend that's could continue. And from a risk reward perspective, ETH BTC has gotten crushed over the past year. And so it offers, really good risk reward, and it doesn't take much to move ETH. Like there's no, if somebody tried to buy $1 billion worth of ETH, it's going to go up a reasonable amount. And so, what we're having now is just folks going out the risk curve with memes, DeFi tokens, and alts. I think that's a trend that's likely going to continue for a short while. That's kind of...
I think that's right. I think our viewers will know, and my audience will know that I've been a very vocal ETH BTC short for years. I did tweet, however, on November 9th that the reversal may be about to happen. I didn't clip the bottom exactly. It went slightly lower from where I said, but it has started to meaningfully move higher. I'm not prepared necessarily to say that we're really confirmed out of this trend, this multi-year downtrend, but it does feel like there are reasons why Ethereum and altcoins could perform well relative to Bitcoin because of the regulatory stuff is mostly good for them more than Bitcoin.
I just come back to the flows and the positioning, right? Folks want to allocate to this space right now. And folks see the return profiles of some of these alts recently, et cetera, and are like, oh, I want to diversify my crypto exposure, right? And so when you've got capital coming in and folks are generally underweight these alts, ETH in particular, it's going to cause, a pretty meaningful reaction.
Yeah. And they have ETH ETFs, so you can easily imagine.
As well. Yeah. And, I think there's so many things in terms of the regulatory stuff that will come and help ETH as a product. So options on ETH ETFs, staking, right? Eventually in-kind create redemption into...
That'd be huge for both,
Yeah. And so, I think that's super, notable. The other thing is just, ETH doesn't necessarily have the same supply dynamics as Bitcoin. If you guys remember throughout this year, we've had to absorb, GOX selling, we had to absorb government selling, Chinese, German, probably some US. And the GBTC unlock, et cetera. And so the market had to absorb a ton of supply. With ETH, you really only have had to absorb the ETH, kind of outflows from
Right.
that grayscale product. But outside of that,
Minimal government holdings. I mean, there's
minimal.
There are some, but it's
Yes. And it's like, okay, you want to own crypto and you're really large. There's only like a couple places to put it. And so, it's Bitcoin and it's ETH.
Yeah.
And ETH has dramatically underperformed over the past year or so. And so I think the story is pretty simple.
Yeah.
I also do think that the 100K level is super significant
For Bitcoin.
in terms of like when you see that breakthrough. I think it'll be explosive once it happens. I don't think it's like, oh, you go from, you might go to like up to 101,000 or something like that. But realistically, I think the move will be violent. You'll probably be 105 to 110 when you actually do break it. And what do alts do in that environment? All right. If anybody's actually genuinely thinking, oh, Bitcoin's going to break through 100, it'd be kind of silly not to have some exposure to other higher beta assets. And so I think that's, partially why, you're getting some of this outperformance is we all think Bitcoin's going to go higher.
So positioning for that higher beta outcome as the space uplifts overall. Yeah.
Right. And, you go back to the classic construct where, to move an alt token 5%, it requires much, much less capital than it does to move Bitcoin up 5%. And so if you do, like, those marginal inflows into the alt complex are a lot more meaningful from a subsequent price return standpoint.
Yep.
And so, like, that's the part of the, the market cycle you're in.
Yep.
And, it likely continues for a little bit.
I think that's right. I think on the macro side, there was some jobs data I saw, like some downward revision. It's not the best, right? But and then
so it's been a bit mixed, right? So you had the JOLTS figure released yesterday, which showed a very dramatic increase in job openings. To the magnitude was not seen since like November of 2023. So
that's healthy. That says
healthy.
The economy wants to grow.
Correct.
Right? Yeah.
You don't put job openings up unless you're intending to hire.
Yeah.
Now, we had ISM services this morning. And ISM services is really important because, services comprise, call it 70% of the U.S. economy, right? So that's really the engine of the U.S. And basically, it came in much softer than expected. It came in around 52 versus expectations of 54. Anything above 50 is expansionary. Below is contractionary. And, the fact that it came in soft was, a sign that things are cooling a little bit. The employment section as well in ISM services came in a bit softer than expected as well, while the prices paid component was elevated. And so what that data print essentially shows you or suggests is that, the U.S. might be in a period of stagflation or might be moving closer to a stagflationary period.
Stagflation-ish, almost,
Yes,
right? It was a slight weakening in the
growth
figures with a slight increase
in
perhaps
prices.
in prices, right?
Right.
So, yeah.
And so it really says stagflation.
Yeah, so be cautious
Be
on
cautious. But I do think that, the economy's still fine.
Yeah.
And no matter what you think about Doge and, all the promises made during the election, one thing I know for sure is that politicians are really good at spending money and they're allergic to not spending it. And so I think the fiscal side of the U.S. is going to be fine for next year. The other thing I'd like to highlight on the macro front is just I think there's a really strong technical picture in U.S. equities for the balance of the year. Strong seasonals. Tech stock buybacks, which, at points in time are like, maybe like $4 to $5 billion a day at their peak. So that's a lot of just natural buy pressure. that's in equities. And so even today on a soft ISM number, like stocks are continuing to make highs. And I think that's just a function of just flows. But again, you know, the S&P is really driven by 5 to 7 names on any given year. And those companies are still doing great.
Yep.
And so I think for the rest of the year, you're probably still going to have a pretty strong equity market. Now, where I do
Santa Claus rally.
correct. Now, where I do turn more cautious though is in January, in the new year, and I think that folks need to be reminded about how slow government is, and I think there's a lot of expectations about the Trump administration, and folks will realize that even though it's his second term and he should be more efficient, etc., like the wheels of government are like stone wheels. They move slowly.
They do.
And so I think
I've said this a lot. I mean, Chair Gary Gensler wasn't confirmed by the Senate until April of 2021, right? So, and that's, the SEC chair, but even the major cabinet officials, the Secretary of Treasury will probably be among the first to be confirmed, along with like the Secretary of Defense or these very critical cabinet roles, but still could take a while, and certainly then takes them time to like get their feet wet, right? To get the stuff going, and certainly to get policy. Why they always talk about the first 100 days. Well, that takes 100 days. That's more than 3 months,
correct.
right? So you're not expecting a ton of action early.
Right. And so I think that's kind of your catalyst for stuff to moderate a little bit.
Right. The actual policy is actually starting, but that will take
And
a
it's
little
also like the guy is crazy, put simply. I mean, that's not to say he's not crazy in a good way or crazy in a bad way. It's just that his idea of like what a reasonable response is outside the normal 1 standard deviation band for what regular government officials, right? Proposing 100% tariffs and all this stuff and governing via social media, etc. And so you're going to have a lot of volatility as a function of just how policy is done. And some of the policies he's proposing, like, I don't necessarily think the market should react well to them, right? Take this China back and forth, right? During his last administration, the concerns about a trade war with China got so aggressive that, the stock market rolled and the Fed started cutting. And so now, like, what were you reading about today? Like, China already started, canceling, I think, germanium or one of these rare earth metals. They're, like, going to stop exporting to the U.S. And so, like, the idea of trade conflict and geopolitical stuff, I think, will become much more apparent once he's in office. And I don't necessarily know if that's going to be good for risk.
All right. Well, it's going to be interesting anyway. That's it. Let's leave it there. Bimet Abibi from Galaxy Trading, my friend. Thank you so much. Let's go now to our guest, Sam Callahan, Bitcoin analyst, author of the News Block. Welcome to Galaxy Brain, Sam. Welcome back.
Thanks, Alex. Happy to be here. Beautiful headquarters
Thank
in
you.
Galaxy.
And it's great to have you in person. You were on the show a couple months ago, maybe like 6 months ago. Sometime after the ETFs, I think, around the ETFs. But you were remote, so it's great to have you here in New York.
Thanks for having me.
Let's talk about Bitcoin and the cycle. We've got a bunch of interesting topics to talk about. You wrote a great paper with Lynn Alden about Bitcoin and global liquidity. Yeah. We'll dive into that a little bit too. But first, I mean, Bitcoin, right as we started, the block clock got disconnected from our Wi-Fi or something. But we're about like...
We had 100K? Is that what that means?
Exactly. 96K, basically. Had a huge November, one of the biggest, I think the third biggest November, which is actually crazy. It wasn't the biggest. Percentage increase in Bitcoin in the 15 years of Bitcoin's history was just last month. Huge uplift. What's the reason for that in your mind? And, how are you feeling over the last month since we finally exited that 237 days of chop?
Yeah, I mean, I think that's part of it was this long consolidation. It was very volatile in that range. So if you were a trader, I mean, if you're a good trader, you're kind of enjoying it. But if you're not experienced, you probably got chopped up pretty hard the last 6 months. But that was kind of like a coiled spring, right? It was going to go one way or the other. And then you kind of had this Goldilocks scenario where with the election, we have regulatory clarity. These headwinds are now tailwinds. For the first time ever, I feel like in the United States, we have a potentially really positive regulatory environment for this entire industry to operate in, which is just extremely bullish. And so I think you're seeing kind of a scramble from institutions, from corporations, all kind of recognizing that they're short Bitcoin. So I think a lot of this has been people kind of saying, okay, we really got to take this seriously. We have nation states talking about adopting it as a Bitcoin, treasury.
Yeah, it does feel like, the level of discourse, or I should even say the levels in the world where the discourse is now happening has elevated significantly, right? The question, if you've got nation states even considering it, even the fact that it's being talked about at all and not being laughed out of the room at all.
Yeah.
Whether or not it happens in the U.S. or anywhere else, just the fact that it's a legitimate conversation.
Yeah.
We've come so far.
Yeah, you have the game theory, and it's not just the regulatory environment, it's also the market infrastructure is maturing, and the access to gain exposure to Bitcoin is better than it's ever been. With the ETFs that we mentioned, now we have options, all these different investment vehicles. And so the access is there, the regulatory environment is there. And then in terms of macro, I think BlackRock puts it well. It's primarily driven by its use case as an alternative monetary asset, and especially amid global and monetary uncertainty is how they put it. Basically, what that means is, as there's more, disruption of the current system, so to speak, and geopolitical tensions, we have tariffs, we have, reshoring, all these inflationary drivers, more instability, economically as well as in currencies around the world, that all drives demand for Bitcoin because that's what Bitcoin's fundamental use case is. And so the macro environment's there, and then also the global liquidity component, which is also, that was in kind of a sideways action at the same time, and we saw it kind of start to creep up in the fall. And as Lynn and I did that report, Bitcoin's really tightly correlated to different measures of global liquidity.
Why don't you explain more about what that means? And did it start going liquidity easing, rising? Was that because of rate cuts starting to happen around the world?
Yeah, I think that was part of it. You really saw central banks begin to cut rates around the world even before the Fed did it, right? There was like the Bank of England, ECB, Bank of Canada. They all started cutting rates, and then the Fed finally did as well in a big way. And so that was definitely part of it. Global M2, look, there's a lot of different ways to measure liquidity, and there's proprietary liquidity measurements, and people sell them because you can get in the weeds and get really granular.
Right.
Everyone thinks they have the better liquidity measure because it is complicated. And there's, Lynn and I chose Global M2 for a number of reasons. We think it's a pretty good measure. It makes sense, like kind of fundamentally. It's basically a measure of the broad money supply, and global, it measures the broad money supply of the biggest 8 economies, basically, the top 8 central banks. And we use the M2 because that's kind of the most readily available cash in the system. Way to think about it. It's saving accounts, it's checking deposits, it's currency. And so it's kind of like the ones that are readily available to spend, invest in the economy. And you could think of it as a way of money creation, right? The amount of credit creation that's happening in the economy. And then it's important that you think about it's also denominated in USD.
Yeah.
And so it's kind of those two components built into one metric, because the fact that it's denominated in USD, that's important because, say, when there's a strengthening dollar, that can be thought of as taking liquidity out of the system.
Right.
Because of the amount of US dollar denominated debt in the world. And so if it gets more expensive to service that debt, that money has to go to service the debt instead of doing something else in the economy. So it pulls liquidity out of the system. And so that metric of global M2 denominated in USD kind of captures the relative strength or weakness of the dollar, as well as the amount of credit creation happening in the economy. So that's why we chose that. It's also, the data is readily available for us. It's not behind any kind of expensive paywall.
Right.
It's there for us to actually use. So that was another reason why we
St. Louis
decided.
Fed publishes this data quite well. It's one of the best data sources, by the way.
Yeah, so that's why we chose that one. Ideally, we would have included things like T-bills as well, like short-term. Like that's probably another one.
Yep.
There's there's so many things that could go into liquidity, but again, it's readily accessible for us to use.
But some of these, since rising in the fall, some of these metrics I've seen people post of global liquidity seem to be declining slowly at the moment. So is that correlation with Bitcoin give you pause for the near-term prospects for BTC USD?
Yeah, so apparently, Bitcoin's we try not to like track the data or the correlation too much, in terms of looking back like when it moves, like a lead lag analysis. We just kind of like look at the relationship. Typically, people are like, "Hey, Bitcoin typically moves 2 to 3 months, after global liquidity." And so people have been posting this chart of different measures of global liquidity in decline recently, and they're like, "Well, Bitcoin's going to follow, and Bitcoin's going to drop."
Right.
But in the report, we mentioned that global liquidity and Bitcoin move 83% of the time of 12-month periods over the last 10 years. But there are 17% of the time where it doesn't. So when does that happen? Well, typically it's when idiosyncratic events happen to Bitcoin itself, the industry itself, that causes that correlation to break down. And it makes sense. It could be bad things like the FTX collapse, where it doesn't matter what's going on with global liquidity. There was a ton of shift in sentiment. There was a ton of fear. A lot of sell pressure when that happened. There's also good events like when the ETFs launched. Liquidity wasn't like spiking up in the beginning of the year, but there was an industry-specific event, the launch of the ETFs, which caused the price to run. And right now, I think we're in one of those events with what happened with the election and the regulatory change. I think what we're seeing is Bitcoin respond to that and its price being driven by that factor more than its long-term correlation with liquidity. So it could be one of those situations where that long-term correlation breaks down because Bitcoin is benefiting from things that are specific to it, if that makes sense.
I think that does make sense. And I think if you look at just the chart this year, it's been mostly the uplift into the ETFs is an ETF-driven catalyst. It's, oh, wow, a whole bunch of people get to buy Bitcoin that weren't able to before. Huge inflows into those vehicles, right? And you see a big rise. Then it's like, well, okay, a lot of people did that. Still, there was, choppy flow in those ETFs from March until September, October. And macro was choppy also, right? So it's sort of like, okay, well, we had the big uplift on the idiosyncratic Bitcoin-specific event. Then we tried to figure out what to do. Then we had another big uplift on another Bitcoin event, which is the election. And I don't think it's going to be 237 days of chop now again.
Yeah.
But it's sort of like, and we got the block clock working while you were talking. So but it does feel like, well, we were up 40% in November, month over month in that month. And now it's kind of like, well, okay, like, should we take a breather, right? Is that how it feels? And it doesn't feel, to your point, like it's because of a forward look on, global M2 declining slightly.
No, honestly, I think it's just taking a breather a little bit. It's been pretty wild.
Yeah.
I expect kind of the dips to be bought. And
they have been.
And they have been. Like I said, I haven't really seen an environment that it's this positive for Bitcoin. It just seems like everything's kind of aligning. And then, like you said, I think global liquidity even, the Fed's likely going to keep cutting rates. That's what kind of what
they're
their plan
expected,
is.
I think, to do another cut in December.
Right. And then the government keeps spending. So
that's true.
That's the other thing. A lot of these it didn't really matter who took office. Both of them had pretty high inflationary fiscal policies for different ways, but they were all going to keep spending.
I agree, and I think that was the market. The market has really thought that even with President-elect Trump coming back for his second non-consecutive term, still he didn't. Deficit remained and debt went up under Trump 1 or 45, and I think most were thinking, tariffs are likely to be inflationary, right? He's not likely to dramatically reduce the fiscal picture. I think there has been a little bit of a pivot in some people's analysis now that with Scott Besson at Treasury with his 3-3-3 concept on GDP and debt and deficit and inflation and but then also with the Department of Government Efficiency that maybe it really is possible that he would cut spending. And I think that people are starting to want, we're not going to know. And even if he and his administration really want to try hard, it's possible they may not be able to, right? We know a lot of the spending is, entitlements and
That's what I
defense
that's what I
and
was
stuff
gonna
that you
say.
really probably can't.
It's only a small part that you can actually
That's
change.
discretionary. Yeah,
exactly.
What's your view on that, or on Besant, like a likelihood of a Trump, effect on macro?
I mean, I'm under the same opinion that like nothing stops this train because of the entitlements. Like what you just said. I mean, so much of the fiscal deficit is kind of set in stone unless Congress changes that.
Yeah.
Right. And I don't see politically that happening, even though it definitely needs to happen. I mean, Stanley Druckenmiller has been warning about this for a long time. He's like, something needs to change, and something needed to change yesterday in terms of the entitlement programs. And so I think the deficit's going to continue. I think he wants to continue those tax cuts. There's estimates from like Penn Warren does a budget model.
Mhm.
They thought that Trump, his policies would increase the fiscal deficit to greater than 7% of GDP. Which is, I mean, that's
a lot.
It's a lot. It's a
Yeah.
lot. And so I don't think that's going to change. Now, I think there's a lot of positivity around the Bitcoin reserve strategy as
Yep,
well.
yep.
The stockpile. And I don't know. I don't know what your thoughts are. I feel like I've heard a lot of chatter that if that happens, it's going to happen pretty fast. And when Scott Bessent takes office, he's inheriting a mess. I mean, he really is. So I saw some piece from Bloomberg that about a quarter of the marketable debt has to be refinanced next year because of how Yellen was issuing on the short end the whole time. So $6.7 trillion he's going to have to refinance. And if he wants to term that out, it could be a problem because if he has to issue more on the long end, the 10-year could maybe rip upwards, and that's going to put a lot of pressure on asset prices more broadly.
Mm-hmm.
And so Scott Bessent actually said this in January before maybe, he thought he was going to be Treasury Secretary. He said, this is going to be a problem. It could really stop. I think he called it Trump's economic Lollapalooza if the long end yields rise.
Yeah.
And so those dynamics, like he has a lot of things to focus on. And so I don't know what the odds are of getting, the Bitcoin reserve done fast because he has a lot of problems that he has to address.
Yeah.
So,
What are your thoughts on the reserve as an idea? Is it a good idea? Or if so, like, how should it be done? Because I found President now-elect Trump's speech in Nashville, the language to be pretty careful on this, right? He did not say a strategic Bitcoin reserve.
No,
he said a
he said
national
stockpile.
Bitcoin stockpile. And I think, to me, he's also the president, or president-elect is extremely vocal about maintaining dollar dominance. And to me, like, if you start backing the dollar with anything other than the full faith and credit of the U.S., doesn't that like raise questions about the dollar's, hegemony? Like, isn't that so wouldn't you, if you also want to do the Bitcoin reserve or stockpile, like, shouldn't it be done like away from the dollar so that there's no need to nuke the dollar just to buy some Bitcoin? You could just, the government could strategically own Bitcoin, doesn't have to do it as part of I think this is my question about the word reserve. I think that scares a lot of dollar, maximalists.
Well, I guess like there's two parts of that. The first is, I do think it's a good idea. I think it's a good idea that the United States holds Bitcoin on its balance sheet.
Me too.
For a number of reasons, I think it could actually, and specifically the Bitcoin Act by Cynthia Lummis. They specifically say you have to hold it for 20 years, and the only reason to sell it is to pay down the debt.
Yep.
That's
pretty reasonable.
It's pretty. It's a solution. Nobody else is coming up with any solution.
That's right.
They're just like, we need to stop spending, but let's keep spending.
Yeah, but we can't stop spending.
Yeah, but we can't stop spending. So,
and the incentive structure for our political class is so out of whack, right? 2 years for re-elects for the House, 6 years for the Senate. You don't have time to actually make a policy like that. There can't be. Yeah.
Yeah. So but the actual mechanics of how to do it. You're right. I thought Trump was very careful, and I bet he was a little upset when RFK Jr. came up before him and was like very specific. Like, this is what we're going to do. Because he was like, oh man, now I have to be a little bit even more specific. Because he was careful with his words.
Right.
And I think there's two things. Like, you can take the Bitcoin that they already own from the different seizures, like the Silk Road, and just kind of, keep that. Say you're going to keep that, and then there's the other one, which is actually like buying more
Right.
Bitcoin, right?
Yep.
And one seems more feasible than the other.
Yep.
And then the way to actually fund the Bitcoin purchases, if they get through, I thought that was an interesting detail of the Bitcoin Act, because they're like, hey, we're going to revalue the gold certificates, because in 1973, the gold is still valued at like $42 from like it's not marked up to the current fair market
That is
value.
crazy. I didn't know about this until I saw this from Senator Loomis about.
Yeah,
that actually is wild.
It is wild, yeah. And so it's just an
They
accounting
haven't been
trick,
marking
right?
it to market. Like it's
Yeah,
strange.
I kind of looked into it. I guess they didn't want to like affect the market for gold prices, and it didn't matter anymore because it wasn't.
And it's effectively
center-
like non-circulating supply. Like it just sits
Yeah,
there,
so
right?
it's just like sitting there.
Is it sitting there? Right, gold
You
bugs
can't-
have wondered for a long
you
time.
can't
Like
audit
audit
it.
Fort Knox,
Audit Fort
right?
Knox,
Is
it's-
there gold there?
I-
They
hey,
say there is. The
they say
Treasury
there is.
says there is.
Trust
I'm gonna
us.
take them for their
Trust
word
them,
on
yeah.
this one.
So that it's just like interesting, how do you pay for it, because you're going to take the difference. It's an accounting trick. You're basically revaluing the gold and then taking that to buy the Bitcoin. And then the other interesting way that they said they're going to pay for it is to take, the Fed remittances and have them pay that. But the Fed has been operating it at a loss for the last 2 years because they jacked up interest rates on themselves, and so their bonds all lost value. But because they jacked up interest rates, they still have to pay the reserves, the interest on the reserves to all the primary dealers and so much. And so like they're operating at a loss, and that's actually a really interesting dynamic happening around the world with central banks operating at a loss, because the Fed can do this thing where they put it as a deferred asset and they don't have to, the Treasury doesn't have to recapitalize the Fed. But that's not the case over in like the UK. Right. They actually have to recapitalize the bank. So it actually just like blows up their deficit even more over there, because the central bank itself is, losing money. It's losing money. It's what's its purpose? Because they're not like, they're losing money, which affects the price stability of one of their mandates. And that's happening all over the world in terms of these central banks, after everyone had to raise interest rates on themselves and they were doing all the QE and putting all the bonds on their balance sheets. But this is kind of a tangent. It's just something I find interesting.
Yeah.
So, but those are the two ways. But really, I mean, like, if they really wanted to pay for it, they should just, they print money, they borrow a bunch of money to do a bunch of silly stuff.
They could borrow it to buy Bitcoin.
They could borrow it to buy Bitcoin. I mean, like, that's
Yeah.
what they should do. They shouldn't get all cute with it.
Yeah.
They should just borrow some money and buy Bitcoin. There's a lot of dumber things they spend money on.
Well, let's talk about people borrowing to buy Bitcoin, specifically MicroStrategy,
oh, yeah.
which we were chuckling about. Of all the Bitcoin that MicroStrategy has purchased, they purchased the most last month, which is actually just kind of wild to think about, right?
Yeah.
I think you said, was it their Bitcoin holdings were up 60% in November?
150,000.
He bought 150,000 BTC in November.
That's wild.
At high prices. Now, MicroStrategy CEO Michael Saylor has said he'll be forever buying the top, it's not about timing that I'm like, oh my gosh, they bought at high prices. It's more just like incredible that the demand from the bond market is sufficient enough to fund that much Bitcoin purchasing by MicroStrategy.
Yeah, I mean, the demand for Bitcoin-backed bonds is just insane.
Yeah,
Right?
this is kind of, I joked about this yesterday when we were talking, like it's almost like Bitcoin DeFi. It's not DeFi, but it's like this is financialization of Bitcoin exposure and bringing it into TradFi, bringing it to the fixed income market in the case of MicroStrategy's converts. There is apparently a lot of demand. I mean, the last slug that he issued had a 0% interest rate.
Yeah, and
So-
a 50% conversion premium.
Right.
55%, I think.
Implies a
actually.
much higher stock price. So,
Yeah.
do you think that demand is going to persist, or can he keep doing? I mean,
It's
in
at
the
some
short
point,
term
there's
and the long term, can he keep doing this?
look, at some point, I mean, the convertible debt market is only so big, but we don't really know where that is.
Yeah.
But his convertible debt, or MicroStrategies, has destroyed every other convertible debt on the market.
Yeah,
So,
like they had to
that's why
buy
they're
it.
so popular.
Yeah.
They're performing so well, and they've been they want that volatility, and so it makes sense, because I explained it like he's providing Bitcoin with training wheels, or it's like bowling with bumpers. Like they're just like people that want like a little bit of Bitcoin, but they want it to limit the downside risk. And they've actually been performing even better than Bitcoin, which is the crazy thing. I thought that was the craziest slide of his Cantor conference, was that the convertible debt for MicroStrategy is outperforming Bitcoin itself, because you basically have like principal protection plus the upside of Bitcoin. I mean, and so, I don't know how long he can keep doing it. I don't think anybody really knows, but it seems right now that there's just a crazy amount of demand for it. And then you have different companies also like Mara and others that are starting to replicate the strategy, and their debt offerings, their convertible debt offerings, just continue to get upsized, oversubscribed. That's yielding 0% too. I think the conversion premium was 40% on the last Mara offering. So the same thing, just incredible demand for Bitcoin-backed fixed income instruments. And I think Saylor says the right thing, where it's like some of them literally can't get exposure to Bitcoin.
Right.
Like they can't. They can only buy fixed income.
And if you're a fixed income fund or desk and you're only allowed to look at debt, that's your mandate, right? So you can't like go buy Bitcoin or go buy MSTR or go buy stocks, right? You're a fixed income fund. And if somebody is saying, hey, look at this note that's the best performing note, like fixed income instrument of the year, aren't you a fixed income guy? Why don't you own this?
Yeah.
Isn't that your job?
Exactly.
Right? Like there's like career risk to missing that.
Absolutely. And so, I mean, I think he's going to keep doing it until the market says he can't.
Yeah.
But right now, like, I mean, it's not just, like I said, it's not just MicroStrategy. It's other companies as well that are doing it, and there's incredible demand.
Let's go back a little bit on the reserve, but not in the U.S. What about other countries? Like, does it make sense for something like Bitcoin, a non-sovereign, decentralized store of value, to be adopted by, I don't know, America's allies, adversaries, or non-aligned countries? I mean, we've got this Bitcoin MENA conference coming up in Abu Dhabi, I think next week. A lot of stuff was announced at the Bitcoin Nashville, the USA one, the Emirates, and there's a lot of chatter that, people are buying out there.
Sovereign
Does that
wealth
make
funds.
sense to you? Yeah.
Yeah, absolutely. I mean, of course. I mean, I like what Jack Muller said one time on like a hit last year. It's like, how many people have to deal with the problem of currency debasement? And he's like, 8 billion.
Yeah.
Like everybody has to deal with it. And so, everybody could use Bitcoin for just the reason that it protects them from currency debasement, and it's a premier way to store value over time. But then for, an adversary of the United States, I mean, ever since they sanctioned Russia, I mean, we see the record demand of gold buying. There's the diversification of their reserves. And then Bitcoin obviously has, it's censorship resistant. Nobody can tell them to send money. It's a apolitical, neutral monetary network that they could access. It's a new system that they can access. And that's really important to consider when you're an adversary of the United States and the dollar system is weaponized against you. And so with the tariffs even, Trump recently came out and he said, if any of these BRICS nations has a currency, we're going to put 100% tariffs on them, right? He threatened them with that. And then the Kremlin came back the next day and they said, if you threaten us with that, that's going to do the opposite effect. It's going to cause us to actually flee the dollar more into alternatives.
Right.
And so if they keep leaning into weaponizing the U.S. dollar, it could actually have the opposite effect.
That's been something I've always worried about when it comes to like sanctions in general and the sanctions regime weaponizing it. Like, pretty simple, is it Gresham's law? Like it's not even really Gresham's law, but in general, the most widely accepted currency is the best money. Like that's what you want. If you come into the jail and offer to pay me in cigarettes, but wasn't Sam Bankman-Fried like they were trading tuna or something, cans of tuna?
Yeah.
Well, it turns out in that jail, cans of tuna were better money. So like if you have cigarettes, it's going to trade at a discount to its value in tuna, right? Like you want to use the money that's the most widely accepted.
Yeah.
And doesn't adding like encumbrances to the dollar make it harder to accept? Like,
Well,
hasn't that always
exactly.
been a
You're adding
problem?
frictions.
Right.
You're adding
And
frictions.
at some point, the frictions become significant.
Yeah, it's more geopolitical tensions, more frictions. And so again, it just kind of, especially Bitcoin with its ability to, cross-border payments, you're basically pushing them into monetary alternatives. So it goes back to
Right.
what BlackRock said.
Right.
So like this is why, to go back what you said too of like why they would want why the U.S. would want to adopt Bitcoin, and would that be anti-dollar?
Yeah.
I loved what Luke Gromen said recently on an interview, and it's what Trump said. He said it's the new oil. I don't know if you saw that clip.
I did, yeah.
And it makes sense, and like in terms of, it's just like in the 70s when they the petrodollar, they had to back the dollar with a commodity to continue the U.S. dollar dominance. And so could they do something similar with Bitcoin, right?
I like this better if you are thinking about its relationship to the dollar, because it's more of a strategic commodity. It's not so much
Yeah. And
Like
what he's saying too is like exactly. But he's talking about driving Bitcoin demand, which drives stablecoin demand, which will drive demand for the treasuries. And so we already know like what's Tether, like the 10th largest buyer of
it's
treasuries.
top 20 for sure, yeah.
It's something like that. I mean, it's insane.
Right, that's a good point.
And so like he's just saying like
There's actually a symbiosis between them.
right. And I wanted to look in after what Luke said. Stablecoin demand with Bitcoin price, like if there's a relationship there, which I think there is.
There is.
Yeah. I haven't looked at it in a while.
It's I haven't tracked it against Bitcoin in particular, but in general, stablecoin like supply rising is bullish for crypto markets broadly. Like
Yeah.
It
That's what I
does
thought.
signal, and it makes sense, right? Because it signals capital inflow.
Exactly.
Right? If we Tether and Circle, which make up the majority of the market, like that means someone is taking U.S. dollars and sending them into and tokenizing them, right? And they're taking them from without the crypto markets and bringing them into the crypto markets, and so that's inflows. It's effectively inflows.
Yeah, and Bitcoiners have been talking about this for years in terms of stablecoin issuers being that demand for treasuries.
Yep.
And like that's why, like I talked about Scott Bessent having to refinance 6.7 trillion, and if he has to term that out, the real problem is like, will there be demand for the long-dated treasury bonds, long-duration treasury bonds? And that's the worry, right? Because the foreigners aren't buying as much. China's not buying as much treasuries. Russia's not going to buy the treasuries. For a number of different reasons, foreigners aren't buying as many treasuries. The commercial banks, you just like stuff them in there as much as you can. You can kind of
Right.
change regulations, but they're kind of stuffed full of treasuries too.
They're stuff.
You can change like pension funds. Like who's going to be buying them? That's always the question that people ask, and it's like, well, stablecoin issuers.
They definitely do.
something.
It's
That's
net
something.
positive for the dollar, absolutely.
Yeah. So like, and then it's
That's an
Bitcoin's
interesting
price rise.
Yeah, I got to look at what Luke said too. I saw people quoting this, and I haven't actually seen the clip yet, but I was asked about this and the symbiosis between. We know that stable coins are supportive of the dollar. Certainly, they extend its reach, like literally, it becomes easier to use. I mean, stable coins. Try sending money, try sending an ACH inside the U.S. I mean, a stable coin transfer is easier than that, let alone sending money across a border. But it also extends the dollar because they buy the collateral that the Treasury issues, the debt.
Yeah.
But I hadn't thought of the idea that growing usage of Bitcoin will also grow the dollar. I mean, it's funny that I hadn't thought of it in this way, because you're right. We've been talking. By the way, critics of Tether have been talking about this for years. They just look at it backwards. They think that Tether is making up the dollars and then using them to buy Bitcoin. It's actually the opposite. People are sending in dollars and using them to buy Bitcoin, right? But I think that's a really interesting idea.
Yeah. I think it's just interesting too, because it shows that there's a lot of different reasons for people in general to want Bitcoin. Right?
There are.
There's different drivers of Bitcoin adoption, whether that's the adversaries trying to look for some kind of protection against the weaponization of the U.S. system against them, or it's the U.S. wanting to drive more adoption of the dollar. It's kind of like they're two sides of it. They're like, okay, well, I want this because of the censorship resistance and nobody telling me what to do. And then the U.S. is coming over here. He's like, well, if we adopt more Bitcoin, then that's going to increase demand for our treasuries. And so it's just like, it's very interesting, like dynamics going out, but it all comes back to the same thing, which is just more demand for Bitcoin.
It really is strange, that thing it's been said for everything is good for Bitcoin, and
I know
it's really that isn't true. Not literally everything is, but you're right. Like competing interests and competitors both finding value in the same. This is what really makes it feel like a commodity to me, right? Because allies and adversaries alike both need oil, right, or gold or corn or whatever, right, like natural gas. So why not a digital commodity? I mean, it makes sense, but it's just people, even someone like me, I've been following it and learning about it and studying it for so long, and it still surprises me.
Yeah.
The wide interest.
Yeah. Not everything is good for Bitcoin, I guess. I mean,
banning it is bad, isn't it?
well, banning it, so that's kind of off the table now. I think that's why we've seen the price.
Yeah.
It just doesn't seem that possible anymore it's even like Morocco was
saw
one of
that.
the, they're one of the, I don't know, dozen countries in the world who have actually like
Formally
outright
banned it. Yeah.
And it's funny because if you look at Chainalysis, like crypto adoption index that
Yeah.
they put out every year,
Yeah.
in 2022, I think Morocco was like the 14th on that list, and then in 2023 it was like 20.
So
it's one of the
banning
top countries. Yeah,
might be good for it.
yeah, it's like you're banning it, but it
Right,
just shows that it's how hard it is to ban.
There were the
right?
they called them the SARS protests in Nigeria, where it was it was an anti-police brutality protest movement, and they banned it because they debanked the protesters, and everyone started using Bitcoin.
Yeah.
So then they tried to ban it, and it just like exploded in use. So actually, maybe
well, maybe
we know banning it.
I just brought that up because like they pivoted, right?
Yeah.
So
Well,
eventually,
yes.
it's just a sign that like, okay, governments aren't going to ban it because A, the ban was ineffective,
Right.
And B, they just pivoted completely, and now they say, hey, we're actually gonna come up with a framework to use it now.
I would say at a minimum, competitors to the U.S. or allies, adversaries, everyone basically. If the U.S. says it's going to do something, at a minimum, you have to consider looking at it yourself.
You have to.
So whether or not we get a stockpile or a reserve of Bitcoin in the U.S. is one thing, but we know we're getting much more progressive and innovation-focused policies on this topic.
Exactly.
So at a minimum, you've got to look at doing the same, right? Morocco can't ban Bitcoin while the U.S. is considering adopting it. That's the bad policy.
Yeah, I mean, and then the other thing that was actually bad for Bitcoin is if they cut off on-ramps and off-ramps, delay Bitcoin adoption if they can't ban it. So that was always like a realistic, I'd say, risk of Bitcoin, just delaying adoption through, what we saw with the banking, for instance, we saw it. We saw like the weaponization of regulatory agencies against the industry being able to operate in the United States. I mean, this really happened. Like Nick brought like a lot of attention to it, but I've lived it. I worked at a Bitcoin company. Like we dealt with it. Our customers dealt with it. I mean, it was very, very real. It's crazy to me that people are suddenly waking up about it. Like we've been talking about it for a long time. I went to DC maybe 2 years ago to talk about this specifically with policymakers about what was happening in terms of the banking. And so that risk also seems to be off the table because there seems to be a total change happening. Trump I think he's about to pick Paul Atkins for SEC
So it
chair.
sounds like
He's reluctant to take the job.
Yeah, I don't know exactly, but it was reported that Laura Shin's outlet Unchained reported that that Atkins has been decided on the pick. In any case, he's been discussed as a possibility.
Yeah, and he's like the co-chair of something called the Token Alliance with the Chamber of Digital Commerce, which is an initiative to like teach people about this industry.
Yeah.
And so I think he's generally an advocate for innovation.
Yes.
So it's a good thing. It's a good thing to have like a change of guard across the board that's more open to this industry, just to stop some of this unconstitutional debanking. And
when they came in the 45th presidency, Trump won. They instituted the Fair Access Rule and undid Operation Choke Point 1.0. So there's quite, even aside from crypto and Operation Choke Point 2.0 and what happened and the noise about it and advocating to undo that, the Trump presidency already did undo it once, right? Like, so a very high likelihood, I agree, that it is rolled back.
And the Chevron deference too. I mean, that's big. It's like SAB 121 is to me a perfect example of that, where it's just like a regulator or a regulatory agency just like throwing down some random
It's like
rule.
making stuff up.
Just making stuff up because like, hey, we're the experts. This is what we should do. And it was actually, the banks were like, we don't want this. Like nobody wants this.
I don't think the bank regulators wanted that. They might want it, but they want to do it themselves. So the effect, they did it as a public company accounting rule, right? It's not only banks, but there's only one public company that custodies Bitcoin. It's Coinbase. So it's basically like either you're referring to just Coinbase or you're also talking about every single bank, which almost all of them are public companies, right? So it dramatically obviously affected banks. And I feel like they're saying, SEC, like, Fed, FDIC, OCC, NYDFS, whomever, like, wait a second, like, this is a policy that is basically a banking regulation you've created.
Yeah.
That's not in your remit. That's supposed to be in our jurisdiction. So, like, even they didn't like it.
Yeah, I mean, Congress didn't like it,
No,
right?
Congress,
I mean, they literally vetoed it.
Yeah, Congress passed I think technically a measure of disapproval of it, officially speaking, under the Congressional Review Act. That passed both houses of Congress, and the president had to veto it.
Right, and
this is crazy.
So, like,
that was crazy.
That is crazy, and like, even like the ABA, the lobbying groups for the banks wrote letters saying like, we don't want this. Like, we want to be able to custody Bitcoin on behalf of our clients. That's all they're saying. Like, we want to be able to serve our clients, which is the craziest thing because, while they stop the most regulated institutions in the country, they'd allowed like the FTX to happen. So it pushes people away from like very, quote unquote safe. Like, I think you should self-custody your Bitcoin, but like,
and I do too, but
like,
institutions can't, right? No, but it pushes people. And look, Coinbase is a great company. Like, and so but if you're an institution, Coinbase is a great company, to be clear. I'm not throwing shade on them, but you've got a younger technology, company like Coinbase, or you've got Alexander Hamilton's bank, or you've got State Street, or like, these are the largest custody banks in the world. So like, wouldn't you want them to be safeguarding this stuff too?
BNY Mellon and State Street, I mean, they were building out their custody services for years. I remember years ago they started.
State Street had a whole. I mean, in like 2017, they employed like 50 Hyperledger developers or something at one point, right? Right. I mean,
and they had to stop though because of these like silly rules and like the regulatory tape and the restrictions. Which is sad, right? It kind of probably delayed things a little bit.
I do think your point, though, that the approach, particularly at the SEC under Chair Gensler, it had an opposite effect. It kept out good players or punished good players and let too many bad actors through.
Yeah, so all those things I would say were net negative, I guess, for Bitcoin adoption, for Bitcoin's price. And now it seems like the pendulum has shifted, so you would just think that these things are going to be positive for Bitcoin adoption and Bitcoin's price. I mean, it just makes sense. Better solutions, improve maturing market infrastructure, better access. These are all good things.
All right, Sam, before we wrap, where can people find you? Where can they read the news block?
It's the newsblock.substack.com.
We'll throw it in the show notes.
It's just, Natalie and I kind of work on like a market update every week where we just kind of pick 3 or 4 of the most important stories, curate, have all the links in there, all the interesting reports I find. I just kind of throw it all in one place so people see. Natalie reads it really well, like she does, and doing a little video now with it, charts, all that kind of stuff. So you can find that there. I'm on Twitter all the time, on X, I guess.
X.com.
X.com.
Great
Sorry.
website.
Sorry,
Great
Elon.
website.
X.
No,
X.
X, the X app.
Yeah, the X app. At Sam Callahan, SamCallah. And also, you could find that liquidity report I did with Lynn. That's on Lynn Alden's website.
We'll
so
throw
you
the
can
link
find
in
that
there
too.
also.
Yeah.
Sam, well, this has been great. Sam Callahan, my friend, thank you so much for coming
thanks,
on
Alex.
Galaxy. That's it for this week's episode of Galaxy Brains. Thanks to our guest, Sam Callahan from the News Block. Check him out. We'll put his stuff in the show notes. And our friend Bimet from Galaxy Trading. As always, everyone have a safe and happy weekend, and we will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.